Good morning, everyone. Happy month end. Hey, Joe, Ian, Cisco, how you guys doing? Good, 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 good. So, we have an inside night, which means our overnight inventory, which is short, pretty much 100% short. All of the trading is underneath, except for this little chunk, underneath yesterday's close. So inventory is short, but we do have a seller. That's healthy, right? We still have those trap longs here that are sort of puking out into these bids. The shorts held the bid at 93, 94 yesterday. I would expect that level to get tested today. Hey Rasto, how you doing? Hope you had a good Christmas. Um, so yeah, I'm looking to see whether we can take out yesterday's low. We have single prints here, so that means that inventory above us is trapped long. So even though, now this is the weird thing, okay, about markets. So inventory is short, right? Which means we're looking for this move up. However, shorter term inventory, and this is why I did that video about time frames. If you guys look at that video, it's in the JJ video section of our Discord. Um, Time frames, right? So there's a time frame of the entire profile is short because it's underneath the close. However, the short-term inventory is all trapped above 48. So we're going to see if we can push down under 43 down to that 36 low, right? Let's see what happens. Now, there you can see it, you know. We had a move yesterday, right? People got caught short under the J low, under the H low. So we should have some covering here. And gee, what a coincidence. That's exactly where we stopped. That's the nice thing about market profile now. If you don't have market profile, don't worry, because once you learn the market profile simple concepts, right, you can use them on a half-hour candle chart. That's basically all that is, right? So there we have it. We have the overnight low right here at 43 and 3/4. The H low is where those late day, and this is another thing, time frame, right? Yesterday, going into the afternoon, that's where everybody from F and G period are short. So that's why we're going to have some responsive buying here. And in markets, now, you guys ever hear the term mechanical market, right? Old guys love to use that term. Oh, it's mechanical. It's mechanical. Well, it's not like there's somebody out there with a monkey wrench and a Phillips screwdriver. But what it really means is at this time of night, the market will trade to very, very obvious references and kind of sit there and not break them. That's what they mean by mechanical. Mechanical, you'll hear them, we'll use that, and even myself, I've used that term too much. Oh, it's mechanical, right? It basically means um, you know, we don't have the size sell orders to break those levels. That's what that means. You'll hear me say, 69.42 size will break that level. So what that means is if I come into this level here, right? If I come into this level here and I show them an order for 100 contracts for sale, likely somebody might buy it, right? 50, 100 contracts. You can see them transacting right now, right? Let me make this bigger. See, 127, 149. You can tap it. We got a poor low, right? So there's some buyer competition there. Now, if I come to that level and I go, all right, you Muppets, I got 5 grand for sale. You will see everybody who's got buy orders here, because the electronic trading is so quick and these algos are so fast. They are so fast. They'll pull the bids. And my 5,000 contracts will take that market down to wherever the next size buyer is. Does that make sense? That's why markets will stop at levels that we call out, especially at night or in the daytime when it's kind of slow, right? So when I was short selling, right, this is what we'd do. We'd get short, and then we had this one market maker who was like a pirate, right? And this guy, he didn't give an F about anything, right? He'd come to that level and we'd all get short, and he'd be shorting too, right? He was the guy who taught me short selling. He'd come down to that level. If it was a stock and say it was like $5, he'd go and put out an offer at 501 for 1,000,000 shares and show it. That's why you don't trust order books, right? Because he'd show 1,000,000 shares and everyone would just run away. And the stock would crater and then we'd cover, right? So that's why we'd go show him some size, right? Of course, the order was fake. You guys call it smurfing or spoofing or whatever the hell you guys call it. But we just called it work, right? So you get down to that level, you show them some size, right? And the bids will scatter like cockroaches in a New York apartment when you turn on the lights. Guaranteed. Now, things are a little different now, so you might have to show them 5 million. So this little area here on the market profile are those single prints, and that is trapped longs. So this is supply, right? Can I write this morning? Maybe. There's supply up here. So if you're a short seller, guess what? There or there is your stop. So if you're short and you think that this is going to break, I would be using 46 and a quarter as a stop, because if the market goes into that area, it means the market doesn't have enough supply and it will rotate higher. Now, if you're feeling like Daddy Warbucks, you'd use the top of the single prints as a short. If you're cheap like me, you'll use the bottom. Okay? So here, you can see those bids coming in. You can see how there's like 88 contracts, 81, 41. There's nothing here, right? All the volume is down here because the shorts are sitting here and they're all bid, right? It's like you had 100 St. Bernards and you're making a ham sandwich. They're all sitting there waiting for the ham to drop off the counter, right? Now, if they see, you drop a lot of ham, they'll drop down because they don't want to pay as much, right? So unfilled bids are what create support, right? And sellers competing at the top of the candle is what creates resistance. Really simple concepts, right? So let's see. Now this is the boring part, okay? The boring part because it's 2:45 in the morning in New York, and it's kind of slow. And it's also month end, right? So month end is like, those old cowboy movies where the two cowboys like have a standoff in the middle of the little town. That's what month end really is, right? Nobody really wants to blink, right? So Cisco, you'll find this interesting. Here's a level 2 of an old deal that I did, right? So you'll see every single bid and every single offer, right, on this level 2. This is an unupdated quote. This idiot never updated his quote. He spoiled my screenshot. But all of these market makers would work for me. So I would control the entire level 2 order book. So if you look, that bid for 100,000 shares at 430, that's my buddy. He's holding the market up so I can sell off. All of these offers are me because I'm the only one who had stock, right? This is one of my client deals. So I'll have a 100,000 share bid at 40, $4.30, and I'll be selling off the 432s, right? So that's how you make a market. That's why you should never trust an order book. Because if you trust an order book, right, it's definitely they'll get you. That's how we get you, right? We paint a picture. Remember, this whole business is about sales, right? Making sales. We'll make the order book look pretty. We'll make the chart look pretty so you guys come in and buy stock and hold on to it, right? Yeah, you were trading pennies. I was selling stock, right? Never buy penny stock. You can get it for free, okay? You don't have to pay for it. Just call up the company and say you're a consultant, and they'll hand it out like M&Ms. It's true. It's true. Never pay for penny stock. That's why when I, you know, wanted to teach people how to trade, they're like, why don't you help them trade penny stocks? I'm like, because it's a fool's game. Maybe 1% of traders will make money trading penny stocks. The rest of them get wiped out. And it's a market that's designed to wipe you out. Now it's okay if you spend $100, buy a couple of thousand shares for like 0.001 cent and then sell it at 0.002, right? Or 0.02. That's a nice win. But man, to buy it and believe in those companies long term, it's tough, right? It's tough. Anyway, while we sit here, we wait for some more people to come into the store, right? So London's going to open soon, right? We'll look for a little movement higher or lower. We just need to see who's coming in. Because right now it is slow. I think it'll probably be a pretty quiet month end. Yeah, you definitely don't want to be in my way when I'm selling, right? When I'm selling penny stock, oh my goodness. Especially if I see somebody else selling, oh, I'll wipe out bids faster than your head, than in a New York second. I'll just be boom. I'll just wipe out all the bids. Because when you own all the supply, or your clients own all the supply, you really literally own the market. So now the big thing is you have to make sure that you get enough buying in to get rid of all that supply. Now I'm working on my balance zones on the 1 minute chart on the other side here. So let me just show you. It's got a set VWAP. Now I use session VWAP, so I use the VWAP for the entire 23-hour session. Yeah, that's why they used to call us eye gougers, Cisco. We're just old eye gougers. So I'm seeing a balance, and when I look for balance, what I'm looking for a low and a high, right? I know that everybody says this is arbitrary, but then they start using it and they see it works. So I'm looking for a low and a high. And when it looks above that high and comes back down, it comes right back down to that low. Now, what does this tell us about the business? What it tells us is the sellers are selling here and they stop selling here while they're waiting for more order flow to come in. That's why you get that chop. So once you have a balance zone, you can, now this is, you could use a smaller balance, like I could use that. You could use those highs and that low, right? So we could do that if I brought this down. So this is, given that, what's our range tonight? 43 to 57. Yeah, that's almost half the range. Let's see. Another nice thing you can do is you can run a volume profile, right? If you're really in doubt, if you run a volume profile, you'll see the bulk of that volume is here, right? So that's the cost basis. We are underneath cost basis, see? That's this, if you look at a profile chart, that's this, that's the same as this, right? So profile charts are pretty much it's just a fancy half-hour candle chart. And they tell you really quickly, they tell you, if you're long here, there's going to be resistance here, right? If the market runs out of supply and chews through that area, then uh-oh, don't be short, right? So now we're going to wait, and all of these trapped longs are just going to drip because not everybody sells at once, right? So as long as that poor low holds, it'll just sit and accumulate here, okay? Let me get back to these balance zones. So when you use balance, you just double the zones. So if this is your cost basis, this is your discount zone, and then you'll double it to the upside, which is your profit zone, right? Because it's a market, right? So, you could think of this chart as we're selling, I don't know, bananas or spices or whatever you think we're selling, right? This is just a chart of how sales are going. Right now, bananas are on discount. And now, for you profile nerds, right, like me, you're waiting for that point of control. That's where 70% of the inventory is priced. You're waiting for that to come down here. Now, doesn't mean it has to. Sometimes a market will move back up without the point of control moving lower, which means the selling really was not that heavy, right? Sometimes it'll take a long time, right? That's why you have time and volume, right? Hey, Raj. Good morning. So yeah, it's another slow night in Walmart. It's a slow night. So we have a seller at 46 and a half. We've got buyers around 45 and a half, three quarters. So right now, if you came in and you just started in and you just joined us, you want to look at these candles. Not the greatest trading tonight, huh? Look at that. See? That's the kind of candle that you don't want to trade. You don't want to trade this, right? We want these nice moves up and down, but it's so choppy in between the move And this is the worst kind of market because it's month end and it's the year end too, right? Hey, Moran, the worst kind of a market is a market that has a move and then it chops for hours and then it moves and then it chops for hours. The only way to really trade that is to build a position. And you really don't want to be putting on a lot of risk building a position on year end, right? Ask any accountant, right? As soon as you say year end, right, to an accountant, they'll start twitching. They'll start having like a nervous twitch, like their eyes will have, they'll get like a nervous twitch in their eye, right? And they'll start holding their stomach because it's a lot of work. Year end is a lot of work accounting wise. So the market, because we deal in money, everything is about accounting. That's why settlement used to be so important, right? Now they're going to, they settle stock trades in one day. In the old days in Canada, it took 13 days to settle a trade. We had 13-day settlement. It was T plus 13, right? And we started T plus 3, right? So it took 3 days, right? Because in the old days, if Cisco sold 1,000 shares of Microsoft and I bought it, somebody would actually take a certificate from Cisco's brokerage firm, go to the brokerage firm where I bought it, pick up a check, and go back. That was clearing and settlement. And there used to be these things called a securities cage, right? You can hide a lot of stuff in a 13-day hole. You can, my friend, and thank God for that because that's how I made 300 grand a month in commissions. Because you let clients free ride the system, right? You charge them 3 to 5%. So $100,000 trade, you could do with us if we charge you 5 grand commission, but you didn't have to have 100 grand to do the trade, right? So here, see how we're creeping up into those single prints there? Yeah, so there used to be this thing called security cages, which were horrible places in the bottom of buildings where they would put all these grunts and they'd be going through these stock certificates and they never usually had heating or air conditioning. So in the summers they were boiling and in the winters they were freezing, right? Most people started in the cage, right, before they worked their way up to a trader job, right? Or you were a courier that ran the certs back and forth, certificates. That's why we call stock paper, because stock was issued on paper certificates. All of that's gone now. It's all electronic. And very soon, if they start using the blockchain to clear trades, trades will settle instantly, right? There's a whole system of plumbing that runs underneath the US equities, futures, commodities markets. There's this whole network of plumbing. It's fascinating, right? And my specialty was understanding how you could work that system for your client's advantage, right? That's why I'm a mechanic. Same as yesterday, Moran, 44 bid. See how we're going up into those single prints? One little tick at a time. See? So we just took out 2 of them. See? See how the offer is lifting? Let's see if we get a print at 47. Not yet. Nobody wants to buy 47 yet. But we ran out of supply under 45 and 46 so far. Let's see what happens. Let's see if London's had its Yorkshire tea or they've just drank the crappy stuff. It is slow. Very slow. And you'll really want to use this slow day to relax, you know, and enjoy yourself. There's going to be a lot of decent trades next year. Did we get a 47 print? We got a 47 print, see? Now the offer's moved up to 47 and a quarter. This is why you watch the offer. See the red line? So as we run out of supply, the market will rotate higher. to get supply. Because nobody needs to sell under 46. Nobody needs to sell under 45 half, under 45. So we got to make them pay up. Right? And this is where market profile is really useful. And you could see it on a candle too, right? So where will our next probable sellers be? They'll be here at 48. Right? Top of the candle, no matter what time frame, is where the sellers come in and start pounding it lower. Now, why do they do that? Because they see other sellers. So if me and Moran and Cisco and Raj, we're all sitting there at a level and there's not enough buyers, one of us is going to drop their price. They have to. Right? You have to lower your prices. You have to get rid of your inventory. Right? That's the business, is to turn your inventory into cash so you can buy more inventory to turn it into more cash. And that's why we want you to sell into strength. Because everybody else is. So if we were long 44 or 45, I'd put some sell orders here at 46 and 3/4, 47 and see if they got taken. If they don't get taken, right, it means I have to wait longer for them to get taken, and they might not, given the circumstances. So this is why we always train traders at first to get in there and sell. So they understand the dynamics of how the market works and when to sell, right? And then as you get tuned into the subtleties of all of this, then you can hold trades longer, right? But you always want to make sure if you're in a profitable trade, do never let a profitable trade turn against you, right? You have to take your money. You have to get paid because no one's going to pay you. You have to pay yourself. It's the most important thing in trading. One thing is it develops trader confidence, right? Because here's the problem. Retail traders are conditioned and used to losing, right? So if you train yourself to make money and get paid a little bit every week, even just a little bit, it will train you to always want to get paid. When you always want to get paid, you're not going to take any stupid risks, right? Get used to being paid. Get used to getting even 50 bucks a day out of this stupid business, right? Right? Even 50 bucks a day. You will not want to give up that 50 bucks. Now, London's opening. See, London opened. And see, the open is this little yellow letter. So it opened and went straight up. It couldn't, usually London likes to go lower and get some cheap supply. But so far, right, just in the first half minute, there's nothing for sale under 46 and a half right now. You see? And we've got 2 single prints left. So we ran out of supply, right? Really simple concepts. And that's what, if you go into a trading room and people are talking about liquidity sweeps and delta and all this BS, ask them, what's your trade plan around that? What's your execution plan around everything that you're chatting about, right? What's your execution plan? That's when you'll get, well, you just have to R and take the trade and, right? Your trade plan should be simple. Supply ran out under this level. I'm buying this level. I'm putting my stop underneath it because if somebody offers it cheaper, there's no sense being me holding supply that's not priced right, right? And as the market goes up, say if I'm long 45, hell, I'll sell 47 and a quarter and take two and a quarter points. I'll take 2 points all day on a trade while everybody else is holding out for a 20, 30 point swing. If you take 2 points on one contract is $100 on the E-mini. On 5 contracts, it's $500. And if you do a $500 trade every day, that's what, 10 grand a month? Of course, commissions are going to add into it, but your commissions are not going to take away huge amounts of your profits. Like one of my guys yesterday, what did he do? Right? He did a 14, what did he make yesterday? He made 1400 bucks and he paid 130 in commissions. Now, he did take a lot of trades. He took 33 trades, right? But he might have had, his coffee was a little strong, so he took a few too many trades. But, he still 1400 minus 131, that's still a good day. I'll take that money all day, every day. If he does that every day, maybe lowers the number of bad trades he takes. Even if he does $1,000 a day, he's had a $20,000 a month. Okay? So it can be done, right? It can be done. And look, we ran out of supply. What a surprise. Or as they say in France, quelle surprise, right? It's month end, it's year end. Remember, don't ever forget that there's this gap down here that doesn't look like it's going to get filled. Now, I could be wrong. We could fill it today. Who knows? But today is year end. This is where everybody marks to market because it's T+1 till tomorrow. And tomorrow is when market makers have their year end because they have to provide liquidity up until the last trading moment. But for regular funds and, us, today is month end. It's T+1, right? And Cisco's right. $50 a day times 255 trading days is 12 grand a year. 12,750. And not many people are making that kind of scratch. We want you to, right? We want you to be profitable. Mahesh, that is not a dumb question at all. How do you see that supply runs out? Not not a dumb question at all. Well, first of all, in market profile, you have something called a poor low. You see this little K period right there by itself? See, usually you get what we call excess. So you'll have that K period, will come down. Here, there's only one little tick of excess. So I know at these stops, the buyers are there. That's where the supply runs out under 45. Then the market rotates all the way back up to 49. It's not a dumb question at all. That is the exact kind of question we want you guys asking. Right? How do you know when supply runs out? Because there's a poor low and the market ripped through those single prints. Right? So if you joined us a little late, right, that's no problem. Just rewind this and you'll see what the single prints are. And you'll see how we ripped right through that area. Single prints on the downside, you can think of it as like a storeroom where we're storing the contracts, right? If you want to think of it as resistance, you can, or a storeroom. And when we have those single prints that were here, the London market opened, right? The London market opened and went straight up. Usually London opens and tries to take out the low, but man, there was a bid, right? So that means nothing for sale under 46.5, right? And we had to send Mr. Bean up to 49.50 to buy, right? Because nothing for sale under 46. Now, I know when I talk about these things, it seems like a bit of a strange concept. The more and more you spend time with us, and that's why we want you to come into our trading room at the Trading Syndicate, it's 20 bucks, guys, right? It's $20, right? And it's not because we undervalue our product, right? If you want to pay more, I have coaching, I have mentorship that's way more expensive. But if you're just looking to start and start learning, right? We keep the price low because we know in a normal trading room environment, it takes people a long time to learn. So we don't want to gouge them, right? VWAP is there at 51 and change. We're going to see now. Here's the thing. How many people do you think are short underneath 48? Because if enough people are short under 48, we'll rip through VWAP and the next sellers will be at 54 here, right? But in a normal market, you'll hit VWAP and hit a bit of resistance. So what do we teach you when you come into our room? We teach you practical ways to make money, right? So there's no gibberish about bookworm and nose print charts and all that crap. We teach you how to make money using a simple candle chart. We take the concepts that we learn from Market Profile, which is a map of the city, and we teach you how to make money in the neighborhood you're in. Right? So if enough people are short under 50 and 48, we will go and tickle the 53s. Right? And overnight inventory is still short. It's probably about 90% short. Yeah, in hindsight, it was a nice trade, but we're just waking up, right, Moran? And I wasn't expecting, I was actually, here's what I was expecting. I was expecting this area to sit for a while. So it just shows that some demand came in. Nose print, toe print, you know, kidney print, right? You don't have to overcomplicate it, right? Some people love to overcomplicate it because it makes them feel smart, but how profitable are they, right? So when you start, you don't want to overcomplicate it, right? You know, once you're making 5, 10 grand a day, do whatever the hell you want, right? But get there, right? Get there, right? We'll tell you where the sellers are, where they stop selling. Where they stop selling is where you go long, right? Before I came on the stream, you saw me do I did the balance with you while I was on stream. So I probably won't even trade today, right? I never trade month end. I never trade year end. It's smart money never really trades year end or month end or quarter end. Right? That's when everybody else is chasing their tail like dogs. Right? We've already made our money for the month, for the year, for the quarter. So we just kind of sit back and let you guys cannibalize yourselves. Right? It's okay to get in there and scalp a little bit. Nothing wrong with that if you feel like it. But don't don't go put your whole account on the line, you know, trying to make money for the end of the month because that's exactly when you lose your account. Feeding the pets. You've got a little zoo in your house there, Moran? That's cool. Yeah, so pretty calm. That was a nice inventory adjustment. We found the bid at 44. Yeah. When VWAP is a few points away from the look below and fail, you probably want to wait for it to clear, Joe, especially if it's slow. Sometimes you can get away with the look below and fail and you buy it under VWAP and then, depending on how fast the market's moving. No problem. And once again, the longer you're with me, the more you'll be able to figure that. Like when you come into work, you're like, oh, business is kind of slow today, right? Or, business is, oh, look, there's a lineup outside the store. Okay, it's going to be hopping when we open the doors, right? So that's you know, just getting used to all the different types of business that you see, right? So now we got sellers at 52 quarter, right? So there should be some sellers at VWAP, right? There should be some sellers at VWAP. That's normal. See, and this is what I was talking about. Slow and choppy, then you get a move, and then slow and choppy. Typical month-end, year-end type trading. Oh boy. Slow, slow, slow. Anybody have any questions? We'll keep it short today if it's really slow like this. No reason to bore the heck out of you. Be be careful, all my sort of under $5 penny stock guys and gals. Be careful. They're going to run some stocks today. They ran some yesterday, right? The seagulls are saying hi, right? We had one that traded at $2.86 and one at 267. One of them traded $410 million worth of paper yesterday. That's nice volume. 600,000 trades. That's beautiful. So somebody pulled 120, 150 million dollars in cash right out of that. Because we always want to be 30 to 40% of the volume. Hey, AZS. So you guys will look at something and go, oh my God, it's up 57% or 100%. I'll look at the dollar volume. I'll like, how much did these lunatics sell into that buying? I don't know what the float one. One was SOPA and then BNAI. Just beautiful liquidity though. I mean, there's nothing better than looking in your client accounts, after a $200 million day and seeing like, 80, $100 million in cash in there because your clients will love you for being the liquidating trader. And that's just beautiful. It's even better when you're the seller, right? When you're in the selling group, I remember there was a deal. It was right after 9/11. It was called Isonics. I still remember it, ISON. And one of my clients in a week sold $80 million worth of stock off of a convertible debenture. That was a beautiful week. He pulled in 80 million. That thing traded like almost $100 million worth of dollar volume that week. And the insiders just blew out of so much stock. And you know what it was? It was a bomb detector where they took, those metal detectors that old guys use on beaches? They took one of those and welded a aluminum or a metal thing on the bottom of it and called it a bomb detector. And people came for the stock and they sold it. Oh my God, they sold so much stock. Crazy. Right? Liquidation is the name of the game. Right? That's how Wall Street works. You come in with your money, we take your money, and then your money goes to, you know, Liechtenstein, Switzerland, Singapore, and it magically finds its way to the Bentley dealership. That's why we at the trading syndicate want to teach you not to be the prey. Have a great new year, AZS. Thank you for being in the room with us. Enjoy your time off. That's pretty much it for today, folks. Now let's see if we can hold 50. Yeah, that's the thing with some of these deals, Cisco. You see the float. Oh, the float's only 5 million shares. Well, how did it trade 151 million shares if the float's only 5 million shares? Oh, you know, it's because somebody like me was selling hundreds of millions of shares into the float. Yeah, the float on the one, here, check this out. On that SOPA, it traded 151 million shares. The float is 5.2 million shares. Oh, what a business. I love this business. Right? You should stop drinking that Red Bull AZS. That stuff's bad for you, man. Switch to water, brother. Give your kidneys a break. Yeah, just year-end accounting, lad, as they say. Or here in Liverpool, they don't use the D. They don't say lad, they say lad, lad, la. My Scouse is getting pretty good, Raj. Pretty soon I'm going to start talking to you in a Scouse accent, just to drive you crazy a little bit. Well, I think that's it for me, folks. Yeah, I miss selling penny stocks, but God, after I met people who actually bought it, I felt guilty. They're like, "Oh yeah, yeah, I bought this deal and it went down." I'm like, "Oh God, I sold 50 million shares of that." It's like, oh, you know, that was the thing. Because I'd never met retail traders until, after I started teaching them in 2012, 13. And they'd be like, "Oh yeah, this deal, I lost so much money on it." I was like, "Oh crap, I was the executing trader on that deal. Sorry." It's like Tilray, right? You should see the boats those guys bought who did that deal out of Vancouver. Oh my God. They bought some beautiful boats. When the pot stocks ran, the Canadians just dumped into it. Oh, I missed that whole thing because I was recuperating from the heart attack. Anywho, folks, the candles are small. It's the end of the year. Does anyone have any questions? If not, just chill out, enjoy your day. I'm going to go put on some Scouse wrap and go work out. Thanks, everyone. We'll see you at 9. Hopefully, it'll be a little busier. Thanks very much. Now, stay out of trouble and don't take candy from strange market makers, my friends. We'll see you in the next session. Bye for now.